Hello, I'm James Preston for Cowcomb Media and welcome to another edition of Executive Corner Expert Talks. In this edition, I'll be shining a light on Queensland-based explorer and resource development company, Kaninda Resources. And the best way to do that is to sit down with the Executive Chairman, Tom Pickett. Tom, thank you so much for joining me today.
Thanks for having me.
Well, Tom, first and foremost, I understand you've had quite a bit of success recently at the Mount Kaninda project.
Yeah, that's right. We've had some significant intercepts with the drill rig. We've been doing some diamond drilling now for a bit over a year. We've had some world-class intercepts, very extensive initial hits, which gave us the confidence to continue our quest. We're up to hole 17 at the moment, and we're looking forward to getting stuck into a little bit more of it next year. Our first hole, or first lengthy hole, was 278 metres of over 1% copper equivalent. That was followed up by 493 metres over 1% copper equivalent. So fantastic hits at the start, and we've continued that quest. I think only two of our holes have been less than 100 metres of 1% copper equivalent since we started.
And I understand as well you're not quite done with the project just as of yet. Is there more drilling that's set to commence shortly?
Yeah, we'll continue to drill into the early part of next year. That will then determine how much further we go with it. We have the advantage, I guess, of having hits from surface. So whilst we are seeing some good evidence of porphyry down deeper, we do have excellent grade from surface down to that level. So we'll continue to expand that resource size into the first half of next year, and then plan out perhaps dealing more with the potential porphyry bulk tonnage system after that.
Let's just change tact a little bit here. Are there any plans to upgrade your existing JORC, and how would results from, for example, the Mount Kaninda project impact the decision to do so?
Yeah, we definitely want to upgrade the existing resource. So we inherited, if you like, a 5.5 million tonne resource at just under 1% copper. The work that we've been doing over the last 12 months or thereabouts has definitely increased the size of that resource. So we intend to continue on with expanding the size of that resource into the future. And every hole that we have planned going forward will be the driver of which will be to expand that resource size.
Well, Tom, also you've had a pretty interesting round of capital raising too. Take me through that. How much funding was raised, and why do you think investors are willing to place their trust in what you're doing?
Yeah, look, our runs are definitely on the board in terms of the pricing that we've been getting for the capital that we've raised, and I guess the support is there from our major shareholders. We have a very sticky shareholder register. We've got excellent support, and having the driver of expanding that resource size, and the fact that there's just simply not enough copper going to be produced to satisfy the net zero targets from the Paris Agreement, that all adds to investor confidence, and certainly the way in which we've been getting fantastic drill intercepts with excellent copper grades and good gold grades. All of that provides confidence for the investor to continue to invest.
Well, Tom, you're talking about the future supply there of copper. I want to get your ideas here on the bigger picture of the demand for critical metals into the future. Is there set to be a significant amount of pressure on the supply for copper beyond those Paris agreements there? Is this an ongoing concern that there could be a real lack in terms of supply?
Yeah, certainly. There just simply isn't enough copper and not enough projects coming on stream to support what's needed. I read recently there's in the order of 10 million tonne deficit over the next decade that's likely to occur, and there's just not enough projects coming online to support it. So with all of the transition to green energy, if you like, and a lot of electric vehicles coming on stream, also a lot of wind farms coming on stream, all of it requires significant amounts of copper. If you're smart, you put your wind farm where the wind is, not where the grid is. So that requires you to have some pretty significant high-density copper wire to link all of that up. So that's not the only thing. There's a bunch of different reasons that there's not enough of it. There's obvious demand. There's clearly just not enough high-quality projects coming on quickly enough, which is why I think Kaninda's well placed, because everything that we've drilled so far, or the majority of what we've drilled so far, is all sitting on an existing mining lease. So it's not that sort of the highest level of tenure. We don't have to get from the exploration lease and then get approved for a mining lease. It's already sitting on one. It's also very close to Gladstone Port, being only 100 k's away. So it puts us in good stead to add to the solution, so to speak, of producing copper.
It's interesting you mentioned there as well about going to the place where the wind actually is as opposed to selecting a certain grid prospect. Because you look over in the US recently, they just did a massive offshore sale to European countries and also some South American countries to try and get water areas where they can set up their own private little wind farms there. Is there an opportunity for you in that sense to, I suppose, engage directly with energy companies as somewhat of an official supplier, if you will?
Look, there's certainly scope for that. And there are, as you say, quite correctly, projects that are propping up and significant investment into the billions of dollars in those types of wind farm projects. And for sure, at some point into the future, whether it be us or whether it be someone that may seek to take over our position, certainly would be well placed to satisfy that demand.
Mm. Well, now let's go back to Mount Caninda for just a little bit. Now, obviously the project itself has a really close proximity to key infrastructure. How do you think that benefits and creates value for the company, not just for yourself, but also, I suppose, for the shareholders?
Yeah, for sure. The fact that you can be 100 k's from a Bunnings, so to speak, is a huge advantage for any mining play. There is an existing mining lease, as I outlined. There's a haul road going past the mine gate. There's good potential access for water infrastructure. All of the things that a large mining operation would require is sitting right there. And that's not sort of the least of which is that we're in an excellent jurisdiction in Queensland. A lot of support for critical metals exploration. And there's much more of an advantage, if you like, to be somewhere like Queensland than some of the more difficult nations in terms of sovereign risk and regulatory compliance.
Mm. Yeah, you're certainly not having to deal with things such as if you're mining out in Zimbabwe, for example. It can be very dicey there, that's for sure. I've interviewed quite a few people that have talked about some of the difficulties about mining in those regions. Can you also take us through another project that you're looking at the moment, which is the Piccadilly project? Yeah,
Piccadilly is a purely gold-focused project west of Townsville. That also has a mining lease surrounded by 2 EPMs. Actually, more like 4 EPMs now. We got 2 granted this year. The gold project known as Piccadilly started out as us exploring for the high-grade material we were seeing at surface and getting a more bulk tonnage exploration operation happening. So we did a whole bunch of work, a little bit of drilling, 31 holes recently, all of which got good gold hits. We've got a lot of ground-based work that's going to happen to this new ground that we've recently been granted. It goes sort of close to the well-endowed gold region of Charters Towers. So we have some good, really good gold hits out of that new ground, and we look forward to getting the results of that exploration in the near future.
I'm speaking with Tom Pickett, the Executive Chairman of Caninda Resources. And Tom, what would you say is the key focus for you over the next 12 months?
More copper. The world's not got enough of it, so we'll keep drilling and we'll keep producing the results.
I like it. It's pure, sweet, simple. That's exactly what we want to hear. Now, just before I let you go, what final words and wisdom do you want to impart to our audience and also your existing and potential new shareholders?
I would say that in order to satisfy the demand, $23 billion a year of investment into new copper projects has to occur. That's 63% higher than the yearly average for the last 30 years. There's a lot to go on in the copper space, and we're well placed to do it.
Yeah, it's a golden opportunity for you guys, and I wish you all the success in the world for it. Tom, thank you so much for your time today.
Thank you.
Well, that's Tom Pickett, the Executive Chairman of Caninda Resources, and if you missed any part of that chat, you can catch the full interview on our YouTube channel, Kalkai Media, so make sure to subscribe. I'm James Preston, reminding you to stay apprised and invest wise with Kalkai.